Let's start. First of all, thank you for organization team for supporting this event. And thank you for the speakers for having accepted my invitation to come to this panel. As I see, many guests after yesterday's speaker dinner did not still arrive today, but hopefully they will join us later. There was a lot of very interesting panel topics yesterday. Most of them were focused about investment and construction and IT projects. So that's why we decided to focus our panel on financing tools for IT and construction, which naturally was supposed to be done only for IT sector, to help venture funds to raise funds for Ukrainian IT projects. So we extended it also to construction and public projects funding because of the number of projects which are running and which will start to run in Ukraine in course of reconstruction and recovery process. And the major problem which Ukraine would certainly experience is financing of the CapEx. CapEx because recovery is, first of all, is creating material base for production, and financing of the production facilities is the major topic which initially every enterprise would experience. We decided to bring to the panel the topic of specialized regulated funds vehicle, which would allow to facilitate fundraising from European donors and from European sponsors and investors to help to recover, first of all, production facilities in Ukraine. The issue is that the funding could be reached by private enterprises basically in two ways. First way is debt funding from the banks. Second way is equity. Of course, the equity is the last option for a company to share the equity with any investor. Everyone prefers to attract debt with low interest rate. During the last years, we experienced many tools which were launched by central banks in the US and Europe for facilitating money access for production facilities and for private companies through quantitative easing programs and through lowering central bank interest rates. So in the era of very low interest rate, it was very attractive to take funding from banks to invest in the company and basically recover almost for free or very low interest. Today the situation is changing because war in Ukraine, but also global trade tensions, as well as some consequences of COVID and other factors, forced central banks to raise rates in order to prevent accelerated inflation. In parallel with raising interest rates, there was also growing inflation, which was in countries that would result in making hardly possible to take any kind of long-term debt with a fixed in advance interest rate. Because you can never expect what would be the interest rate in the consecutive years. Those equity being again a tool which becomes attractive for companies to finance their capex. Traditionally, easiest way to get access to international capital markets and to increase own equity was an IPO. However, there is number of small and medium-sized companies that cannot afford such a long and costly process like an IPO in developed countries in order to attract funding through to their businesses. So that's why we put in place regulated funds and as a tool for private companies to benefit from public market and to give them an opportunity to access to equity leverage from international investors to development of their companies. That kind of tools was initially created, first of all, to finance construction projects where a company were buying land and before starting operation on the production facilities, they needed money to make buildings and to develop the facilities, first of all. So this is a situation where the funds could help to connect private companies to institutional investors and to retail investors across developed countries like US and Europe in order to help to find way to construct development of the business. This brought us to bring together today on this panel speakers from different countries who had previous experience in building such kind of fund structure to finance multi-industrial businesses. First is Stefan Kleile from Axolaris Group that was founded in 2010, one of the first company which was focused on alternative investment funds sectors in Europe, even before the European regulation took place in 2030. Since that time, the company had managed to attract over 15,000 investors in the 40 funds under management with 1.2 billion in managed assets. Initially, the company was founded in Germany, but then extended its operation also to other countries globally. First, we set up another management company in Liechtenstein, then also presence in France, and also having offices in Singapore and Hong Kong. Second, our speaker, Renato Brioni, who is focused on development and growth of IT companies in blockchain infrastructure, who was one of the first realizing that funds as a regulated vehicle could help in fundraising for ensuring equity leverage for capital growth in IT companies. Initially from Croatia, he decided to set up that fund in Liechtenstein because of attractiveness of the jurisdiction, which we will compare with other traditional funds places like Luxembourg and also Switzerland today. As a third speaker is former member of fifth Polish government administration responsible for privatization and state agency, which is also experience in his previous era development of restructuring of Poland from Soviet types of economy to world economy, who had large experience in restructurization of public companies and can evidence that in order to achieve most efficient management, you need, first of all, transparency over that companies. And that transparency could be ensured only by regulated tools, giving secure access to investors to invest in the company on one side, and on the other side to give some certainty and trust for investors that the companies will be managed in accordance with required process and procedures at the level of highest corporate governance standards. Finally, our speaker from Luxembourg, who is very well experienced in funds management and who established that company many years ago, focused on development of biggest real estate project across Luxembourg, Belgium, Netherlands. who will speak about the funds and their role in development of real estate projects based on his European experience. And last, our speaker is from Switzerland, who will provide us with his view of how Swiss market and Swiss venture industry could react on demand of Ukrainian companies to get access to European markets and to ensure their further growth. So now I probably would ask Stefan Kleile to give a brief overview about regulated vehicles, how are they functioning, and what are their benefits for investors and for companies on same, with some comparison to other funds financial vehicles like IPO, crowdfunding, and financing of privately held structures.
Yeah, good morning, everyone. My name is Stefan Kleile. I'm the CEO of Xalaris Group. We are fully regulated fund managers in Germany and Liechtenstein, as Volodymyr said, and thank you for the invitation. We manage 1.2 billion euros under management in different asset classes like private equity, real estate, and renewables energy. And what we saw in the last couple of months is definitely a request for financing capex in the real estate sector. And what we see is a lot of requests from institutional investors for financing into startups, VCs, and or crypto, or let's say blockchain possibilities and the companies. The main difference of regulated funds in comparison to typical BVI structures or crowd investing is pretty simple. Many of the investors where we talked to asked us, how can we secure the money and what is the benefit of a fund? So how does it proceed? And one of the main topics is the valuation that we need to do. The second thing is from the typical European Union crowdfunding platforms, they are allowed to collect money in a range between 1 and 8 million, and then it's closed. So above 8 million, you are not able to do with a crowdfunding platform in several projects. Here in Liechtenstein, where we set up one of our fund management companies, we have a special situation as Liechtenstein is part of the European Union or of the EWR and of the Swiss market. So we are approved, the fund that we set up in Liechtenstein is approved not only by the European law, it's also approved by the Swiss law. So this is the only possibility in whole Europe where you can do the fundraising in the European Union and with the same fund vehicle in Switzerland. And this is pretty important when you want to collect money from institutional like investors like pension funds and or insurances, because they are only allowed to invest into fully regulated fund structuring vehicles. So if you, for example, set up a Luxembourg, which is the same EU regime than Liechtenstein from the fund regulatory framework, you are not allowed to sell it to pension funds and insurance companies in Switzerland. The second important thing to understand is that Liechtenstein has an old relationship to Singapore and Hong Kong as well. So the fund that you set up in Liechtenstein under the EU regime is also approved in Hong Kong as fully regulated fund and in Singapore. So this is one of the main purposes and the most important benefits that you are able to collect money in different countries all over the world, including that we have processes to also do fundraising for US investors, Japanese investors, and Canadian investors. And whoever wants to did fundraising in the last years knows exactly how important and difficult it is to bring US investors or US invest companies into funds. We did it, as Volodymyr said, in 13 years, so I think we know exactly how to proceed. And the request for the Ukraine market comes slightly slow, but it comes. And the request is for real estate development. How can we finance capex? And to understand the difference between an IPO and a fund is, we can decide how we finance the real estate. So we can use the money out of the fund for debt financing, we can use it for equity finance, so we can bring the finance solution out of the fund to the needs of the project, how it should be financed. And this is one of the main differences to any other finance possibilities of a regulated fund, and it's well accepted by nearly each investor all over the world. Thank you very much.
So probably we will give an overview how the fund structure looks like and who are the key players in the funds industry. On the slide you see that the composition of the funds management process is not only done by one company, but ensuring involvement of multiple players, including custodian banks and financial regulation authority, as well as extended auditors that work both on the side of figures, but also on the side of procedures. The management structure is split basically in two components. One is focused on controlling of asset in terms of its economical activity, which is called portfolio management function, which make an overview and analysis of investment activity and its attractiveness for investors when it needs to be taken any decision on capex or on selling or on buying asset. And another function which is independent from the portfolio management is a risk management function, which ensures the overview of all processes and that every management process is in line with regulatory requirements. Here we have some different structuring options of different kind of funds and profits that could be brought to investor. First, funds can be used for initial funding, but it can be used also on exit in order to prepare a tax-efficient distribution to investors. It can be used to increase the value of the assets. And as Stefan just mentioned it, taking the benefit of European regulation, which was simplified on a European level, that the funds regulation framework was set up on by a European directive in 2013, which allows funds functioning within one European country and ability to sell that funds or to attract investor in other European country and to invest in any other country as well. That's called European Financial Passporting System. Why we talk about regulated funds? As already mentioned, it's raised borrowing cost for companies' growth due to increased capital raise is now making harder to get access to cheap debt financing. And on the other side, once investors will enter as an equity partner, they will have a request for transparency. This is ensured by funds governance structure. In the beginning, we mentioned it also that the benefits for Ukraine could be in different sectors. Not only in construction, but it can be also in real estate, in IT and other sectors. Maybe it could be interesting to share an experience for one of the funds manager who first created a fund in IT project and blockchain infrastructure, Rian Dobrinovic.
Thank you. I think the energy level here is very low because of the last night drinks and dinner that we had, and I think we need to reshake that a little bit. Typically, when I do this kind of speeches, I make people stand up and do a few exercises if we have it this early, but I'm not going to do that today, okay? My name is Renato Brioni. I'm the managing founder of Mocha Ventures, which is one of the first, we would say, digital asset funds regulated for from Liechtenstein, where Stefan helped us actually to execute one. So let me tell the story how we got there, because you probably came here for two reasons. First of all, can you raise hands? How many of you have a startup or worked in a startup ever? 1, 2, 3, 4. Okay. How many of you ever raised capital for startup? All right, great. And how many of you have pains raising capital for startups? typically it's like, what, 80% of your time? So I'm converted. I'm like, you know, a person who smoked cigarette and then stopped smoking cigarettes. I was a CEO and a founder of 3 companies, 2 very successful, one fabulously unsuccessful. And I learned more from my failures than from my successes. And then I realized that after a sabbatical that I'm better doing VC, investing in companies, than actually being a CEO. Because it takes us on a level after 50 million, you either are made for it or not, as you guys know. That brought me to the ideas like, okay, I need the capital, constantly raise capital, constantly, every 18 months you need to raise capital. And if you don't need it, you need it because the valuation needs to grow. So you kind of, you know, this kind of rat race. And to me, actually earlier than that, I got pulled into the VC world, standard tech VC, Silicon Valley stuff, you know, 4 to 8x returns over 7 years. And then in 2020, one of my friends pulled me into the Taiwan. And they said, look, we have this crypto fund. I was like, crypto what? And they said, yeah, it's great. We can have a lot of returns. It's amazing. I was like, okay, sounds like fraud. Let me read about it more. Let me get educated. So I did. I was on the sidelines. I was looking what's happening. We invested in 200 companies, funded actually very well, closed on March 24, 2022. Got great returns, and then the crash happened. And then out of the 200 companies, 40 survived. And now, last time I checked, 14 are actually alive. And then I said to the guys, look, I want to do something on my own, but I want to do it in Europe. I'm European, I'm from Croatia. I live between London, Dubai, and Zagreb. It makes sense that this entire industry is going to go down the path of regulatory kind of framework. And people laughed at me. They said, no, we are cowboys. We're going to do this, you know, spray and pray model. I'll tell you stories like we're in Dubai. You would have a panel like this with 6 smart entrepreneurs that would ask between 2 to 10 million, and people will give them money the next morning. And I was like, this doesn't make no sense. I was like, where's due diligence? Like, due diligence. The guy can party with us, or the girl. It's awesome, you know? We should give them money. And it worked for some time, until it didn't. And then FTX happened, some good faces that we see from yesterday, Cameron. And people tell me, like, how can you then invest in companies, and look what happened with FTX, look what happened in the market. And I said, people, come on, look, it's like same as 2000, right? It's a bubble. Industry is very young. The problem that happened with FTX and others is not a problem of the blockchain as such or internet. It's a problem of a corporate governance. You let somebody to take a lot of billions of dollars and have fun. And that's what happens if you're not regulated, which is okay. So you empower them. Now, how, if you are from Ukraine, or if you're raising a startup, or if you ever thinking of creating your own fund, you know, where should you do it, how should you do it? And I traveled throughout the world, and I went to Hong Kong, Singapore, ended up in Liechtenstein, Luxembourg. And Stefan and his team have the best framework, and they understood this blockchain act that is actually very good framework for Europe, as well as the new laws that we have in Europe. So Europe is quite regulated. You can even digitalize your own fund if you want to, and offer that as security or non-security on exchanges like Binance, etc., if they accept it. Now, going back to the question, why did I do this, and why we think it's important, one, from fundraising perspective of a startup, and also as an investor. So we had this GPLP structure, you probably as well, like in family office, where you would open British Virgin Islands or somewhere else. It's just an investment company. You give us a few X of millions of dollars, and we pretend that we can invest properly, and then hopefully we can get some returns. Bad thing about it, you can disappear with that money, like FTX did, or similar. So there's no checks and balances in place. And if you look at the majority of investors in funds are family offices, they are risk averse, right? So I took the 2 approach. I went to the startups and I said, okay, what do you guys need? And they told us what they need. And then I looked, what are the underlying principles of these successful companies who are thriving now in a market that had failed, and they're in blockchain industry. And I found 7 underlying bullet points, which we can talk after this because I don't want to take too much of my time. So there is a pattern that we recognized, and it became our investment thesis. And then you have 70 questions of due diligence that takes probably 2 weeks to go through. So when a startup comes to us for investment, we say, look, we need to go through a proper due diligence. And they said, oh, well, we used to get money in 2 weeks or a week. We said, well, sorry, we're not that kind of players. Then they walk away, which is a good deterrent, because then 50% of the bad companies immediately falls away. So that's your kind of moat. Now going forward into why investors would invest, in why actually family offices helped us, the structure helped us attract family offices from UAE, from London, from Switzerland, to invest in us is because they asked us, Renato, how do you invest and where is the money? So when we told them the process is like, look, if Gabriel comes with a great idea that we need to give him $1 million for a new DeFi project, right? Bigger. We would then start a due diligence. We will have a first initial discussion. I'm going to say, look, dude, this is great. It passes the bullshit test. Let's go to the next step. 2 weeks time due diligence. They fill up online due diligence, which is quite straightforward, which is given by Solaris and Authority. And then once we've done that, we have to give it to the third-party valuator, which we have to pay. That third-party valuator gives us a stamp, is this a good valuation or not, or does it fit under bylaws? And then, if that's okay, it goes to them, they approve it, and then according to the contract that we have with Gabriel, money from our custodian bank is being sent to your wallet. So at any point of time, I actually don't have access to the money that we raised from investors. It sits at the custodian bank, managed by us, but actually overlooked by Solaris and similar groups that do that, right? So from investor's point of view, if Gabriel wants to invest, he can have an option to invest in, you have a family office, right? So you can either invest in a non-regulated fund or regulated fund, and he could probably sleep better if he invests in a regulated fund. On the other side, if you're a startup, why do you care who you get the money from, right? You would say, like, I need the money, just give me the money so I can run. Yeah, that was true until last summer, right? And then war happened and everything. So people now ask you, where is the money coming from? Number one. Second is credibility. You would rather take more money from JP Morgan Stanley than some unknown fund, right? And it's easier if you regulate a fund to get a second raise for tier 1 VCs like Anderson Horowitz, Sequoia Capital, etc. Because they also know that you've done your homework properly as a fund. So the startup tying themselves to a regulated fund or them being regulated in a blockchain industry helps tremendously for their success down the line. Okay, after the Series A, Series B, etc. So that's kind of the gist what's happening on the market and where the industry is going. Whoever you talk to in Davos and etc., they said, okay, blockchain is here to stay. In UK, you have 7.5 million people using crypto on a daily basis. So it's here to stay. It's not going to go away. We just need to make it proper and regulated so things like FTX and Silicon Valley Bank and others don't happen that often. So that's kind of my 2 cents. If you have any other questions later, you can just hold my hand and we can discuss over coffee. Okay, thank you. So
here we put on the screen the schemes how the setup of fund is looking from organizational point of view. Maybe Stefan, if you can give just a brief comment on how investor accessing the fund and what is the difference between passive investor and active investor, general partners and investors that are just participating in the fund.
Sure. Yeah, so from the structure, it's a typical what we set up here. It's a typical CCAF like in Luxembourg, and the fund management is done here in this case by Solaris Capital as a fully regulated fund manager, and the GP is the, let's say, asset owner of the fund, and the depository is the custodian bank. So if we want to invest, as Renato said, we have to, the VC manager is doing the asset sourcing, he's doing the startup of the DD, and then the investment will be done via Solaris Capital and the depository. So the secureness of the money is completely fulfilled, and this is one of the main benefits of the fund.
Thank you, Stefan. Now probably we will, as we mentioned at Luxembourg, while talking about Liechtenstein, maybe we would ask Gabriel to give a brief overview of Luxembourg structure and sharing his experience on funding companies through the funds from Luxembourg.
Hello, everyone. So I will just step back and go from Mr. Brioni's experience in life, and as you very well stated, you're always at different stage of investment and market. You first find the cowboys, so to say, then you find the cleaners, and then you get the guys in white collar with the nice tie that come and make it a safe haven. Well, Luxembourg faced the same. As you may know, it used to be just considered as a cleaning machine for undeclared money. Then it became at the dawn of the financial crisis of 2009. It started to become, let's say, a fund place. It started to become marketed as a fund place. So Luxembourg had to create tools. And funds were, of course, essential to speak to institutional clients, to attract money, but you also needed a real economy tool to make the match between the targeted investor and the target on ground. And that came with tools like the SOPAR fee regime, which has been now, let's say, on the road for more than 15 years, and is used by worldwide institutional players. It's a no-brainer, and funds love it because that tool is very flexible and very easy to handle for any type of fund, whether they're registered in Europe or out of Europe. That's the first thing I want to say. And Luxembourg played that part on a European investment level as well as out of Europe investment level. That could be very well designed to host specific investment for infrastructure and IT and real estate in Ukraine. That could fit very well. Another thing we can say of Luxembourg environment is it used to be a banking system, but I like to say we should not consider it this way anymore. We have to really look it as an element of the pipe in the whole financing system. Really, nowadays, we have to consider that fund industry took over, let's say, 80 to 90% of the activity in Luxembourg. And I think that is really the sign that Luxembourg is recognized as a pass-through, very well tailored for any kind of fund investment, whether it would be classical or alternative. To come back to Ukraine and the opportunities, fund industry, VC, PE, they all have the same issue. They need to source, and that you do that on ground, and they need to speak to investors that are most of the time away and do not understand what's going on ground. As said, when money comes easy, when liquidity is there, you often find the cowboys. But when you start counting, you need due diligence. And the good thing with funds is that you can speak to an investor in the US for a project in Ukraine, let's say social homes or hospital or whatever, and they will understand it because they will speak to a fund team that fund team speak also with an investment board, and that investment board did its check. Or they're speaking with an investment house that is outsourced the project for the fund. But at least the investor in US knows what he receives as kind of investment. He understands the risk level, the opportunity as well. He understands the maturity, the level of liquidity, and that is very important.
Thank you. But what is the difference between regulated funds and private funds that are not regulated funds? In your view, what are the benefits of first comparing to second?
Very easy. If you speak of small investment, if you speak of, let's say, family level risk, you will like non-regulated. It's very much easy to apprehend, and let's say the bureaucracy is quite light. But if you want to speak about sizable investment up from let's say 50 million up, you need regulation. You need regulation, and in this way, I think. The difference you will find is the level of security compared to the risk return. Once you go over 50 million, being non-regulated means it's a family-owned business, so to say. It's a big family that runs its matters, and they don't need anybody else. But if you are above 50 million and you have cross-border business operations, you need somehow to be regulated, because otherwise your investor will at some point reach a bottleneck in which they cannot come to you, simply because of, let's say, lack of security on the way you handle your business.
As we have some startups which are present today in the Zal, if there is any question, feel free to ask them in course of the discussion and don't wait till the end of it. Just raise a hand if someone would have a question. Yeah, please.
Just to complete something, again, going back to Ukraine and the fund industry and the role to play. As you know, we for the moment have a global economy that lacks of liquidity, and the last 12 months central bank's decision did not help in the way liquidity is flowing the real economy. Fund help regulate that. They help solve this. Because you do not only exchange liquidity, you are trading, when you trade a fund share, you are trading return, you are trading opportunity. So it means that when you have a fund that is ready to onboard project in a country that is meant to be rebuilt and to reborn, really, the fact to have people on ground capable to source fund for opportunities really means a lot, because this will help foreign money channel to Ukraine almost seamlessly. And on top of that, blockchain is very interesting because, as Mr. Brioni said, blockchain increases that liquidity aspect for anybody. For anybody. Sometimes fund industry is too complicated for end customer, retail, let's say retail customer. But when you come to the level of blockchain, when you come to tokenizing, as we say, a real estate piece, any amount of money could be approved. And it's not impossible for the fund to manage, let's say, 10,000 investors on the same building, to just give a picture. So really, blockchain could be an opportunity for Ukraine and the fund industry to show that blockchain works, and blockchain is meant to stay.
Maybe a step back with question to Renato. Once we started to talk about VC for IT and startups, in your view, how Ukrainian startups could benefit from that financial infrastructure with regulated funds? Renato.
So is the question, how can Ukrainian startups benefit from regulated startup? I think I answered it before. It's very simple. You have to raise your first pre-seed money, right? Somewhere, somehow. And then, but that's not the end of the story. 18 months down the line, you'll burn out your cash and you need to get more funds, right? Now the question is, do you go again to a fund who will just write another check? Or you will have a fund who is regulated and did a proper due diligence on you, did a proper data room, it's ready for a Series A and Series B, so your fundraise, instead of going to be 6 months, is going to be probably 4 weeks. We're going to bring put it this way, if you attach yourself to a regulated fund, the risk of fundraising is removed by 90%, because then you just go to a regulated fund and say, guys, I need more money, we're running out in about 6 months' time of the cash, what can we do? Then we sit down, we call a few other kind of friendly VCs, we said, look, this is a really good deal, we already vested in, this is the due diligence room, this is the report, read it. So instead of them bombarding the CEO with all these things again and again, over and over, they will just look at that and they say, okay, this makes sense. And 80% of the investors in the first round are going to follow you, right? And then the Series B is going to be even easier, okay? Because it's just an update of your data room. And it just makes perfect sense when somebody's following you in that segment, especially if you're in blockchain, because who's going to now give you the money in blockchain if you're not regulated as a company as well? So now the companies are being regulated as well, if I'm not mistaken, right, Stefan, according to the new law. So it just makes sense. It's where the industry is going to be going and where it is going, right? So it's probably, if you look at 24 months down the line, that will be your unique selling point as a startup, okay? That you attach yourself to it. Or it can be a make or break for you down the line. It really depends, because you will have some funds that will close because of these reasons. They will be prosecuted by SEC as well. We're seeing that. So there are just 2 big funds just closed the other day from America, and they're moving to, is it Liechtenstein, Luxembourg? So this is happening because of lack of regulations there and good regulations that we have in Europe. So I think we are a good 18 months or even more ahead of United States and other markets. So if you want to open a fund, go and talk to Stefan. If you need investment, talk to me.
Well, just summarizing a bit, so while startups are starting to grow and regulated funds is a kind of tool for switch them from in fundraising from A, B rounds to C rounds, they need a more solid vehicle like regulated solution in order to ensure that the more serious investor would come at a later funding stages with some certainty and transparency of the structure. Maybe we can ask our colleague from Poland how sees the opportunity of regulated products for the public industry.
Thank you very much for invitation, Stefan and Władimir. Dobry dzień dla was. Of course, I speak Polish and Russian, and hope very soon I will be almost forced to study Ukrainian because we still have about 5 million Ukrainians living in Poland. And this is a very serious point from very beginning. You want to enter Ukraine, and there is a real situation, war, and instability in terms of a legal framework. Only in Warsaw you have about 60,000 students from Ukraine. And this is my answer, how to enter Ukraine. Just focus on these people and try to put them together. And they work together, they meet each other, yeah? But in more formal way. A lot of them, for sure, are very entrepreneur and ready to establish companies or already established companies. I'm very, very motivated by yesterday evening. Although I arrived after 9 o'clock directly from Abu Dhabi, from another big event, because of the fact that most of you are under 30, who were there. Yeah? That remind me the real situation in 1989, when I was 23. And we were very powerful students, independent organization, together with ISEC. I was National Committee President of ISEC Poland, very powerful in 106 countries, among 700 or more universities in economics and business, who took over power in Poland in terms of the economic environment. And I'm very thankful to Switzerland, and it's absolutely serious. And I just recalled today morning that 33 years ago, with 2 cars, as managers of a private entrepreneur club, the first chamber of commerce of private companies in Gdańsk, established in 1988, end of, we came to Switzerland, to airport in Zurich, to sign agreement with a minister of Swiss government, we private people, without any power of attorney from the Polish government, because we simply didn't care at that time. And the minister from Switzerland received us, and Verein für freies Unternehmen from from north of Switzerland, I will remind. And we started with 50 entrepreneurs, private entrepreneurs, exchange and visiting Swiss companies. And it ended up with, believe me, 15,000 Polish entrepreneurs who visited Switzerland over 25 years with a budget similar to Know-How Fund, but specially dedicated to this, to train Polish entrepreneurs how to manage startups. It's all about education, and you need to be open-minded. And you can create this in cooperation with the matured representatives of economists. I remember a situation at this visit in Switzerland, Schaffhausen, that was a city. Yeah? I saw the Swiss went to Poland then as a visiting us, and they saw a lot of holes in roads, very bad quality of infrastructure, and my feeling, 24 years, I felt very bad about this, yeah, and the answer of a Swiss really big guy for 4 generations in business, he said, "Don't think like this. I see everywhere I go through the Warsaw, Gdańsk, plenty of business opportunities. Change your mindset. You need funds." That's what I'm referring to, the topic of this conference and the panel. You need funds to improve this infrastructure. And for us, where everything is beautiful, already built up, etc., in Switzerland, Germany, Austria, this is land of huge opportunities. Let's talk how to establish public-private partnership scheme, how to establish legal framework, predictable investments terms in order to make our fundraising successful, our investors happy. And that was the reason why because this is also about personal, invitation, my presence here to say about real world, about real country, big country in transition, which went through various different situations, and I was and I am still part of this transition. It didn't happen overnight. It will not finish tomorrow by signing EU membership by Ukraine, which I hope is going to happen, and I'm going to support it, and I'm supporting it every day next year. I'm serious. And you can count on a lot of Polish politicians, members of the parliament in European Union, who are going to vote it. And I can tell you in few days, probably on Monday, there will be big announcement, very strong political announcement. I just got today morning information. I don't know if it's public, but I don't care. Moldavia is going to leave formally the post-Soviet common organization of the post-Soviet common countries. Okay, so I have plenty of notes. I have several presentations. But I think this panel is about discussion with you, how you want to create Ukraine, and really, I'm so happy that again Switzerland is very active, proactive, open-minded to support, and take advantage of people and structures already established in cooperation with Swiss advisors, with Austrian advisors, with German advisors, with British, Swedish, what we did from 1990, with the active participation. They moved to Poland, they got very nice salary. We set up special, for example, privatization foundation, which financed these salaries, because at that time, when I moved to Polish government for the first time in 1990, with the first prime minister after 50 years elected in the free democratic parliamentary elections, Tadeusz Mazowiecki, I was making $300 per month, okay? But my advisors, who came from other countries, make about $10,000 per month. That's the situation which you need to face. yes, and which happened in Poland, which was maybe a mistake. But at that time, if I would make more than that, I would be on the first pages of newspapers next day, because simply the average salary at that time was $100. So there is a lot of details you need to face, you need to analyze with really professional people, and without discussions, without proper communication, you are not able to recover a country, which in result will be safe place for investors to invest on big scale. Of course, the money will come from European Commission, from World Bank, IFC. I'm saying on behalf of a group of big investors, going to announce another big fund very soon, also supporting other post-war countries. Why? Because up to now, in most of cases, the international community simply failed in terms of restructuring countries in post-war phase. You name it, Afghanistan, Iraq, what's happening in Syria, in Libya. So some, let's say, institutional and private and politicians make kind of roundtable, and there is plenty of roundtables going on right now. In a result of this, hopefully, the new, not only philosophy, but some financial new institutions going to be established, and the decision-making power in this institutional organizations, funds, recovery funds, the private entrepreneurs will play the major role. Not necessarily the managers or politicians of various, let's say, political organizations. Just to finish my pre-word, kind of, for the last 5 years, I personally support, and this is I sacrifice my private time as an expert evaluator for EIC Accelerator Fund within European Commission. This is the fund which was established in 2018 with 2 billion euro, also for Ukrainian companies and member companies coming from the member state of European Union and economic zone associated with European Union. And for the first time, after, let's say, of course, 2 years preparations, the fund was established, and decision-making power is in the hands of people outsourced, like me, who are more than 20, 30 years in business. We evaluate projects, okay? And this public money and this fund was very successful, and from 2021, the European Commission launched the next round with 10 billion euro, up to 17.5 million euro per project blended finances available. This fund is simply a silent investor. Not more than 25% is going to take as an institutional investor for not more than 15 million euro equity. And I strongly advise you to apply, because this part of the world, European companies from Europe, Central Europe, are not just very little take advantage of this fund. Okay, so that's I think the reason also I'm telling you about this, because simply Italian, Swiss from the first round took about 600 million euro. From Poland, only 70 million euro. within this fund. So there's plenty of opportunities, and create your joint ventures with EU-registered companies. This is exactly for innovative projects in tier research level between 5 and 6. There is from 1 to 9 tier research level, and from 5 to 6, that's the minimum you need to meet in terms of you need to have pilot or the version of your innovation project, and a separate presentation. Of course, I can talk hours about the framework of private equity, venture capital world we established after 1990, but all is related to European Union legal framework. And I really advise Ukraine to put all efforts, political efforts, to be the member of the European Union as soon as possible. The association treaty agreement is not enough. It's transition period, and for most of investors, you need to be in European Union in predictable environment. I'm telling you, as a Pole who experienced very difficult time to raise any capital, I'm telling you, as a ex-president of a state agency of foreign investments, in the time when the inflation was from 300%, we decreased to 30%, we raised millions of dollars, billions of dollars, but it was very painful process, and that's what I would advise for Ukrainian government. Bring Ukrainians living abroad in Western countries, make kind of a Ukrainian American desk within your state agency for foreign investments or other institutions, to make these people feel that they are important. That's what we did with mostly Polish-American community. Within my state agency, I immediately, as a first decision after the visit of State Secretary Kissinger in 1993, we established Polish-American investment desk. We appointed people, we financed it. We didn't ask Americans for funding. We employed Americans with Polish passports simply to bring American capital as soon as possible, because this is your real security guarantee. Investments, not armies. Thank you.
Thank you very much for your intervention. Just a quick question. How state-controlled companies could benefit from coupling with regulated funds in Europe? Is there any benefit for them in terms of restructuring, setting up corporate and transparent governance process, increase fundability of the companies, and make more efficient management?
In principle, I'm absolutely against state control in business, in companies. So I strongly advise Ukrainian government to privatize as much as possible in a transparent way. That's what happened in Ukraine in the last 30 years, was mostly absolutely different to, I would say, diplomatic. Very different from the privatization which happened in Poland. You know what I mean. And I'm not person who is talking theoretically. In 1993, I was head of an OECD conference on the level of ministries, from economic ministries in Kiev. And we wanted very much to help Ukraine how to establish the framework. I was chairman of this conference 30 years ago, okay? And what happened? That time, the Ukrainian government sent 2 private advisors. No one from the government came. No one from the President Kuchma office. That was such a shame for me, because simply I was responsible for that conference. And there was OECD, the richest countries, plus Poland, as a, let's say, country who were next to Ukraine and already in transition. So this kind of attitude already changed in Ukraine, obviously. And we don't talk about the past today, okay? But without remembering about the past experience, about people also who make this kind of decisions in the past, you will not go ahead. If you have these people still around your reforms, you will not go ahead. That's why I mentioned from very beginning that we as students were very powerful because we were united. Young people were united in one big, practically two big organizations which established 3 other political parties and 7 governments. That's why, to be very straight, nobody was able to kick me out from the government, from 5 governments, because simply we worked together, we supported each other, and we used to be educated in the best universities in the world. Okay, also thanks to ISEC organization, which is today ISEC alumni, very powerful organization with 1.6 million members. And I'm telling you, don't rely on state companies, just privatize. We did national investment funds, 15 national investment funds. We listed them on the Warsaw Stock Exchange, and we sold them. We sold them. And for the transition period, the fund management companies like yours managed these 15 different national investment funds in order to sell them to private equity, to venture capital, you name it. And at the same time, we tried to, and we did, all these processes make transparent by public offerings. And even more, the stocks of the national investment funds belonged by ownership certificates to 30 million Polish people. So they got it for free. And they could, this certificates later consolidate, sell, so another entrepreneurs, fund managers collected these certificates and make another fund. So funds and fund management companies, let people work, yes? Decentralized. Absolutely don't make decentralized structures. We used to have 49 voivodeship regions, so we gave up so much power, decentralized, to 49 regions. And many institutions established, and many institutional funds were established with public money. And later they also privatized in some way. Of course, there was plenty of scandals. Don't expect miracles, paradise on the earth. There is no paradise on the earth except Lugano region. I just was passing by train by the Paradiso city. So probably it's only here, the paradise. Thank you.
Well, thank you for your intervention. So coming back to the topic of regulation and regulated products, let's switch to Switzerland, which was mostly known for its domiciliation companies in commodity tradings in the past, and now is progressing, taking over European regulation on funds management and implementing it at national level in Switzerland, despite the fact that Switzerland is not part of European Union, even not part of European Economic Area, differently to Liechtenstein, which allows to Liechtenstein to trade within the whole European Union. But Switzerland is now just implementing the laws which are being put in place in Europe. What is your view on that instruments like regulated funds that were not very well developed in Switzerland comparing to venture capital firms that had been and asset management companies that had been largely registered in Switzerland, and how that perspective, from your view, could probably help for Ukraine?
Thank you very much, Volodymyr, for the nice invitation. And to Andrei, thank you very much for the partnership between Poland and Switzerland. And I hope that in 20 years, the Ukrainian friends sitting here will basically say the same about our two countries. To your question, Volodymyr, the regulated funds business in Switzerland is growing, is developing. We will soon be able to launch non-regulated funds called LQIF. That is basically something similar than Luxembourg-based RAIF. Let me address this a little bit from a more strategic perspective. Over the last 20 years, I have a lot of experience in buy-side investment. Most recently at Credit Suisse, I was responsible for the entire distribution, selection, and also implementation of the investment strategy. What we observe now over the last couple of years in wealth management, asset management, is basically on one hand a concentration, consolidation, quest for size, and indeed there are some businesses that indeed demand size, speaking for instance about the passive business, ETF, index fund, etc., where there is so much pressure that some funds even basically give zero or negative fees on index-based products. On the other end, there is a growing business of specialized asset managers, such as Stefan's business, which in my view is very, very, very attractive because it provides unique investment opportunities for investors, be it professional investors or even institutional investors. If we look at the regulation, so in the European, I think global wealth management banking business, I think regulation is very tight, is accelerating even in Switzerland after the recent happening. Capital adequacy rules, Basel III, for instance, basically is clearly putting some limits on debt lending, right? That is super expensive for banks to lend, right? So I think the answer is going to be to financing of infrastructure is going to be private funds. And if you look at the investment management landscape, right, there is a huge competition in the market at the moment. Huge competition between a number of players, right? The service is very transparent. The fees are also very transparent. Money is switching very rapidly from one player to the other for good and for the bad reasons, and sometimes even actually intraday, right? And performance of mandates, of portfolios, of investment portfolios or investors' portfolio are actually very, very, very transparent. So I think in this environment where yields, actually real yields, pretty much globally are still negative, there is still some huge demand for investments from a buy-side perspective. And in this environment, considering basically the emergence or the further development of specialized players, all the regulatory environment, all the competitive environment, that negative real yields environment, I think there is quite some demand for specialized products, which are of course off balance sheets from banks, right? And I think they can really make the difference. They can really make the difference both for investors seeking CapEx funding, but also for investors on the buy side, high net worth institutional clients, ultra high net worth individuals seeking investment opportunities besides just passive or kind of standard retail type of investment opportunities. So that's the way I would approach this. I think CapEx in Ukraine will need to be financed through vehicles, and it will be our job to make those vehicles accessible and also attractive to investors to make things happening.
Thank you very much. What is the preference from your view could be for Ukraine raising investments through debt or through equity?
if I look at the interest rate environment at the moment, which is pretty much deeply negative everywhere, right? Real nominal interest rates have indeed risen pretty much everywhere, right? But inflation is still between, I don't know, 2.5% for Switzerland, right, to 14% in some countries. I think debt is unlikely to be attractive kind of at the bottom line, so I think it's going to be more attractive to go into equity type of products. And if I look at rich millionaires, so ultra high net worth or even high net worth individuals, they will probably favor equity products too.
Thank you. What is the view from Luxembourg on that?
In terms of?
In terms of debt or equity?
No, I follow equity. That's the moment for equity, and you can see that in the deal size, for example, taking place in the PE industry, everybody is reviewing its multiples, and that means equity needs to have a sound interestment to the risk taken, and that's because of the absence of response of debt. And the only debt you find for the moment that remains dynamic on the market somehow, it's direct lending. But direct lending comes mostly from PE firms, so I fully follow. That's the same in Luxembourg. We see a lot of special purpose vehicle being established just to channel capex funding by equity.
I think early in the cycle, you're going to probably really prefer equity type of investments than debt type of investments, right? Apart from the negative yield environment. There is also another aspect to it, right? Higher yields, of course, affects private equity type of investments, right? We saw that with valuation of private equity funds over the last 2 years basically suffering. Right? And if you look at the interest rate cycle, in the US, probably we are about to reach the top. We are about to reach the peak, perhaps another 25 basis points, perhaps another 50 basis points, but then we should be done. Switzerland is probably done, maximum 25 basis points. Probably Mrs. Lagarde has to do more, but I think over the next couple of quarters, I think we will reach the peak in rates, and that could prove a very nice entry opportunity for equity type of investments on the private side.
I rely to that. That's true, and we get some signals from the American market, like giants like BlackRock, and so on, are piling money for the moment, and they keep on accepting money inflow, but they are not very aggressive yet on acquisition. They are not positioning, so they watch out. Absolutely agree, but they are ready now. They're ready. 6 months ago was not the case. Now they are ready for acquisition, and maybe they anticipate 2, 3, 4 years down the line they will refinance. But for the moment, equity.
And indeed, dry powder over the last 18 months has been further piling up, right? Private equity firms, KKRs, BlackRock, you name them, right? They have been further piling up, and investment opportunities have been less frequent due to interest rate environment, hiking interest rates. But I think that could prove attractive again, and there is indeed a lot of money that needs to be put at work.
If we talk about jurisdiction for placement of funds, Liechtenstein comparing to Luxembourg or Switzerland, let's have a short exchange. What are the main benefits? Let's start maybe from Luxembourg, which has the largest volume under management is 6 trillion of euro being managed through Luxembourg funds. What makes this jurisdiction so attractive for funds placement? Gabriel.
Sorry, I was not listening to you. I'm sorry.
When we talk about jurisdiction for funds placement, why Luxembourg? What makes it so attractive that Luxembourg is managing over 6 billion investment through fund vehicles?
Very easy. You find any type of regulated or non-regulated legal framework that will help you channel your money where you need to. Luxembourg, once again, is not a destination. It is a pass-through. It is a crossroad. And in that sense, the legislator has been very successful the last 20 years to implement up-to-date and keep up-to-date legal frameworks for any type of investment with any type of target. And today it is recognized worldwide. That is why you will see very often Asian, North American, South American, Indian investors passing by Luxembourg for an investment that is not even within Europe. And the main reason for that, not to go into technical aspects, is that you find the fund profile, the OPCVM, the SPV you need for your target. Just one very simple example. I am an independent director on a securitization company that has been investing for 15 years, mainly in Latin America. And we went on what we called hard asset targets, like containers and things like that. But today we do real estate. And we still have the securitization body up in place, and it does not bother us, it does not bother our investors. But the targets have been changing through time, and this was possible because of the Luxembourg regulation. It would not have been so easy, for example, in Belgium.
If I may, I have a question for Olivieri. So in terms of tokenization now, which is being regulated by the Blockchain Act and others, and the real estate, which our fund is tokenizing the Emiratis Real Estate Investment Fund, and we see gold is being tokenized now, commercial is being tokenized. When we invest in our bylaws, I think, Stefan, it's now 50-50 or 60-40 equity versus token, because we hope that tokens will bring higher velocity to liquidity, right? Because they will go on an exchange and hopefully they're going to make better returns. How do you see that happening in Switzerland? Have any regulatory laws around it? Do you see investors going down the path or not? Are they accepting the existing law that is there, or?
So on the legal aspect, I can't comment too much on that. From what I'm understanding is it is still under development, and there are very few kind of funds going into that direction. Now, strategically going forward, right? I think that tokenized assets, right, will need to find their way into investment vehicles, be it Swiss-based funds, Liechtenstein-based funds, Luxembourg-based funds, right? At the moment, it's not that easy, but I think tokenization is basically a form of implementation of an asset, a form of democratization of an asset, right? A fantastic technology, actually, right? So I think over the next couple of years, I think that will increasingly be the topic. I'm seeing behind the scenes the first discussion about setting up a fund where the fund invests in kind of traditional assets and tokenized assets, so that creates a little bit of difficulties for the fund structure. Speaking about the custodian, speaking a bit about the regulation, right? The distribution. I think we need a little bit more time, without being a lawyer, of course, to make it happen. But clearly, tokenization is and digital assets is a kind of a technology. I'm very, very, very bullish on it.
Thank you, Olivier.
I would like to complement the question because it obviously interests me a lot. On a Swiss environment perspective, do you also believe that the legislator would be keen on hosting, let's say, the first major tokenized vehicle for, let's say, cross-border transactions related to real estate or infrastructure? I'm questioning because I see a lot of small guys for the moment in Switzerland proposing tokenized buildings. One of the guys, very famous on YouTube, has been successful within 1 day funding for a Turkish investment. So Turkish lira is a bit suffering for the moment, but the guy has been able to convince his audience of taking small bits, and the move, the liquidity, for example, was at a rate never seen before. What do you think do you think Switzerland could be ready to accompany that move and help the guys grow on bigger scales?
So again, I'm not the lawyer, I'm not a regulatory guy, I'm an investor, I'm a CFA charter holder, right? So I can only kind of comment from that perspective. So those type of structures are being implemented at the moment in Switzerland, right? Probably not that visible, right? Not large scale, right? In order to make it more large scale, probably we will need to have some regulation, right? Some approval from FINMA, which is the local regulatory body, right? And what we shouldn't forget from a buy side and distribution perspective, in order for those structures to gain traction, right, we need to make sure they flow into investment portfolios, right, of clients, right? I think in the first stage I presume it's going to be first for professional investors, i.e. under Swiss law, 5 million without know-how or 500,000 with know-how, and at a later stage, probably down a couple of years down the road, to retail investors. So I think the distribution is going to be the most important aspect, because at the moment those type of structures are not really distributable to the large public.
Thank you very much. That was very. Yeah, please.
Just coming back to Ukraine, I wanted to ask you a question, maybe to Switzerland and also to Luxembourg. I haven't seen many investments actually in Ukrainian equity on the fund level, and of course it's explainable because there is a war, and you have the risk matrix which identifies the highest risk on return. I would like to hear your assessment, and what do you think, what is the future of the impact investing? Because obviously we are talking about green finance, we are talking about making impact through the fund industry. And what are the obstacles that you see currently on the way for Ukrainian equity to be taken into the fund structures? And what would you advise to Ukrainian government to, obviously we have to improve corporate structures. The equity companies, they have to look that they really are conform with all the requirements, that's clear. But if you could make an assessment and outlook.
To whom was the question?
To the Luxembourg.
Well, let's answer in a very brief manner, because we are approaching an end to our discussion and need some place for the next panelists. Okay. Okay. So we give a brief comment.
Sure. So in short, for the moment, it's certain that, again, coming back to liquidity, that's always what I look at when I look at the financial environment and opportunities. Liquidity is not there for Ukraine. But because for the moment, the tools are not yet fully established, but it's taking place. And certainly fund can respond to that. If you take, let's say, classical funds, green funds for the moment, they would not be allowed to go to Ukraine because, of course, as you said, it would be a red marker, that would be red flag finished. But if you have a recovery fund in place, as this was very well explained by the panel, these risks are taken into account, and the necessary the necessary framework in terms of legislations are also being covered, and that takes place with the diplomacy. So, of course, today we are trying to make a projection, and we are trying to anticipate the recovery move. So what I can tell you now is, even though money is not there yet, that's the intent. And the market, the industry is looking to that.
We have to fix now our panel and leave space for the next one. Just summarizing our discussion today in terms of fund regulation vehicles, that first remark that raised borrowings cost for companies grows now, forcing companies to look for equity financing instead of debt financing, and the reduction of quantitative easing money, higher interest rate and inflation, of course, with the war in Ukraine and previous global tentations lead to end cheap money era. So that's why there is no options anymore as to switch to equity. The equity being more complicated to raise from investors comparing to debt, because this is not a just simplified lending procedure. You need to go either through IPO or crowdfunding. IPO process is long-lasting and very costly, and regulated funds provides a specific tool which can switch private company to public market without going IPO. And third remark that was told already, that request for transparency, especially for investor pools coming passively in equity of the other companies, put demand for regulated products in order to finance private companies. Maybe we will put an end on that. Just to give thank you to every speaker, and especially for your interventions, Gabriel, related to Luxembourg and funny questions that you had in respect of tokens regulation. Just to mention probably that Liechtenstein had a step forward upfront of Switzerland and Luxembourg, implementing specialized tokens regulation already in 2020, with, which make it most attractive for IT companies and for blockchain and IT infrastructure. That is one of the reasons why Mocha Fund was registered in Liechtenstein and not in Luxembourg. And the another point is that Liechtenstein, being much smaller, provides you a benefit of direct access to a financial regulating body, and the process of creating of a product takes few weeks instead of several months in Luxembourg, and this is the reason that why Xolaris Group entered actually Liechtenstein market prior or instead of Luxembourg, where it had also its presence in the past.